From meme to utility, Floki has it all. NFT metaverse game called Valhalla. Floki University, DeFi, charity, and shopping. Floki is governed by the people, for the people. Floki, together there is no stopping us.
That is right. That is right. This has been a sponsored chapter and a highlight shout out to our partners at Floki and Tokenify, incredible people, partner to my firm, to the Birbness. And you're part of this excellent community at the Birbness that's been basically considered the reliable trading community, trusted by thousands since 2017. And we are actually accredited to do what we're doing, unlike most of the other scammers out there. And welcome to the stream. Welcome to the stream, everybody. This is such an awesome opportunity to touch the base right before the year ends, right before 2023 ends. And ladies and gentlemen, this has been quite all right. This has been quite a volatile year, although good for the crypto traders, although good for the cryptocurrency enthusiasts and for the risk traders, for the risk investors, since the markets are up all the way, and they're up in size, they're up in volume, they're up in every single term. Long story short, this year has been up. And it's in line with the expectations. So welcome to the stream, everybody. Please let me know how you guys are doing, where you're from, where you're writing. Talk to me. Let's talk about how you guys are holding up. What are your next 2024 year resolutions? What are you guys gonna keep up with? Or are you guys gonna dismiss as irrelevant and focus somewhere else? Let me know. And first and foremost, if you can hear me properly, that's if we engage in the conversation, we're gonna know exactly that everything is well received. Andre, Romania. There's Zenkert. Oh, Christmas done. Phew. Well, it's past New Year's with all. That's it. That's it, my friend. Good choice. Good choice to be on the stream. We got Andre from Romania. Sweden. Love Romania. Love Sweden. Great people out there. Very smart people. I'll be in Romania as well for in Bucharest for the Crypto Expo Europe. We're closing the final stuff with them. Most likely we're gonna have some participation in that as the Birbness. So it's a great place. Romania is opening up to great opportunities right there. Sweden as well. Spain, Yolanda. Hola. This is such an awesome plane space up there in Spain. I love the highways there on our way to Portugal. Spain has excellent roads, beautiful mountain roads, very empty roads, very good quality. So very good stuff. Thanks for tuning in. I'll do my best to jump right into the conclusions, because at the end of the day, you came here for the knowledge, and you came here to give yourself a chance to, equip yourself with the knowledge, with the right tools, with the right education that will help you beat the market, that will help you beat better traders than the others. Because at the end of the day, it doesn't matter as much if you're profitable or unprofitable. It matters only in the context, in the relative context, right? Because at times, losing money, though losing less than everybody else, is enough of outperformance to be beaten, right? Is enough of being a good trader. Perhaps being a good trader means losing less than everybody else. All right. So it's the context that matters. In the relative context, we all know that at times losing less is better than losing more. At times when the markets are crashing, not earning money, though not losing at the same time, is considered already a vast outperformance. If Bitcoin crashes 70-80% and you lose only 20%, that makes you a good trader. Have you thought about it this way? So it's not about profits, it's about risk-adjusted profits. It's about risk-adjusted returns. So it's the risk that you expose yourself to that generates the returns that matters. Both, okay? Bonsoir, Paris, Maine. Amazing. Very good stuff. Okay, let's get it rolling. So long story short, I'm gonna show you guys some details on the new year. Well, we're gonna have a little bit of a prediction chapter. However, predictions already, full disclosure again, take it with a grain of salt. I don't know the future. I don't have a crystal ball. So take it with a grain of salt. I'm not going to tell you exactly when Bitcoin is going to be the next year at the same time, because I don't know, right? I don't know a single thing about the future. I'm wrong 5,000 times a day. I'm wrong about my trades. I just got stopped on my trade, by the way, right before the stream. So I'm gonna cover this right on the stream as well. And we're gonna discuss the best strategies for 2024. Okay, so let me just find real quick two things that I wanted to show you in those terms, right? Because 2024, maybe I'm gonna show you a little bit of a presentation that I did the other day. Hold on. Let me just find it. Yeah, let's try. Why not? So hold on. Let me try to incorporate that somehow. And just maybe I'm gonna be able to show you a little bit of the presentation. Cool, fair enough. I'm gonna do my best as we go. So performance chart. Let's take a look at the performance chart. I'm gonna pop it up here. Gonna be able to see it right in a second. That's gonna be easiest, I think. Okay. So, where are we? This is relative. This is the S&P 500 sectors, ETFs. In order to know anything about crypto, we need to acknowledge the fact that Bitcoin doesn't trade in vacuum. It trades in the same universe that the stocks do. And because of that, it often correlates. And if it correlates, it means that there are periods, there are times, parts of the cycle's phases where Bitcoin moves similar to S&P 500 and it moves completely opposite, right? And knowing of those actually helps us spot the best performers. So let's take a look back in a year. It's gonna be January 23rd, starting right here. Let's take a look this way, right? So what we're looking at, long story short, let's take a black arrow right here. First of all, the leading sector since the beginning of the year is quite outstanding, and there's quite a gap. There are a couple of two different sections, if you will, right? There are three winners, and there's everything else. Three winners is basically it's technology, okay? It's the communication services, XOC, and that's going to be discretionary, consumer discretionary, okay? So the things that we want versus the things that we need. So this gives you a clear understanding that there is a vast outperformance by about 30 percentage points, okay? So you've got basically 50, 55, 56% return year to date of the technology sector. Communication services return 54 almost percent. Consumer discretionary 40% year to date. Okay, while everything else, that industrials 17%, and the worst one was utilities, staples, healthcare, and energy. So the things that performed the best in 2022 are the worst performers right now. So by holding on to the last year winners, you, at the best case, you would have landed a 0% return while missing out a 50% or 40% rallies. That really doesn't make it a good deal, does it? Okay, so clear, distinct leadership and a very powerful leadership by the risk assets, okay, by the things that we want, by the speculative assets, by more volatility related stuff done the safety, than the defensive stock. So offense versus defense has been the main narrative. And if we add Bitcoin to it, let's take a look what's going to happen. So Bitcoin to it added, I think I need to clear one, hold on. BTC USDT, if we add this one, what's going to happen is, again, take it back to January, to the beginning of 2023, what's going to show up is the very distinct leadership of Bitcoin, right? Bitcoin outperforms by 100 percentage points, basically. It tripled, okay? Tripled the returns of the best performing stock sector right there for the technology. So the outperformed, right? This is the best performing assets in this pack, and it's quite a challenge right there to beat this strong leadership, right? So Bitcoin has been on top of all that. Just to kind of like confirm. Just to confirm again how strong and powerful is holding on to the Bitcoin and holding on to the winners, right? Because at the end of the day, the relative strength principle, the momentum principles assume that the outperforming assets will continue to outperform whereas the underperforming assets will continue to underperform. So literally by holding on to something that made you money last year, you would have landed in a negative while missing out on 50% rally or while missing an 160% rally for Bitcoin. Right? So this is a cost of not holding Bitcoin. Cost of not holding Bitcoin is way higher than than holding basically anything else right there. So that's a starting point. Then if we go a little bit deeper into the market summary, what we're going to take a look at is the Dow Jones Industrials basically on the new all-time highs, obviously, right? Very powerful, resilient movement that refuses to pull back, that refuses to cool off, to cool down just a little bit. Price action-based support and along with the 20-day support by the moving average, somewhere around 37,000 points, then 35,500. Raw numbers work because we make them work. S&P 500 nearing the all-time highs. Are we going to close the 2023 as a pre-election bullish year with the new all-time high? Well, that would be spectacular, right? So we are right there. We're touching, literally snipping there, and then just tickling this 4,800, which is the all-time high areas for the S&P today. 0.36 down percent. So not the strongest one, not the strongest day for this Friday. Then XLE, the energy sector. The energy sector is not really doing so well for the aforementioned reasons, right? It performed barely on the break-even well, while it was the best performing last year. Okay, so the energy is basically invading more and more the 200-day moving average, which is not moving up anymore. The 200-day moving average is a respective long-term trend, the dominant market tendency trajectory, and it's flat, right? It's slowed down. It had been moving up, however, it slowed down and it's not moving up anymore as much. There's a little bit of a chop. However, the whole part is getting more and more aggressive and around the 200-day moving average. It's not really defending it so well as it did in the past, right? So all those things concerned tells us again that we have quite a spectacular moment in the market. The gold is up near the all-time highs right there after shooting to new all-time highs, right? It's closing the year in a very strong, powerful movement. Just checking my notes. Gold is going to be, what's it going to be? Well, S&P 500 is on the year-to-date basis 23% up, almost 24%. Gold on the year-to-date basis is 13% up. Silver is 0.28% down. So it's not much. It's basically stayed flat for most of the year, which is aligning with this overall chop that silver does, which is way less directional than the gold is. The gold has all the free moving averages, 200-day, 50-day, and the 20-day, long-term, medium-term, and short-term trends. Those are the trends. You don't need the price action as much as you need those trends. So those trends tell you that the gold is moving up. This is gold saying, hey, listen, I'm moving up across all the time frames, okay? So for palladium, it's been quite an interesting recovery lately. However, it's a bear market, clearly 200-day moving average falling quite aggressively. Platinum is flat after a serious decline right there. It's pushing right now above. There is some questionable pattern, if you will. All right, couple of those resistance points, maybe round numbers, 1,000 units, whatever, inverted head and shoulders if you were very stubborn to call it anyhow. It doesn't matter too much. What matters is that there's a breakout above the 200-day moving average, which is flat, which may tell you that there's a little bit of a breakthrough moment coming up. Just checking what's there. Wheat, how is wheat doing? Wheat is actually potentially breaking in, like it's broken out of the base, clear accumulation for September until December, quite a breakout, now resisting at a 200-day moving average, which is a perfectly straight line, basically representing the long-term trend and the bear market, if you will. Okay, sugar doesn't tell me much. Soybeans, okay, also moving down, 200-day moving average down. So and short and medium term sideways. So it's down sideways period in the bear market, it seems. Coffee on the rise. Maybe just because I'm about to drink mine. And by the way, real quick, let me know, guys. You know, what's the plan of yours for the next couple of months? Let's say 2024. What's it going to be? Greetings from Zurich. So I'm going to head to the World Economic Forum to Davos. I'm going to take a flight to Zurich. Switzerland is beautiful. Netherlands, Emmen, Netherlands, beautiful. I love it so much. I have got a chance and honor to meet a lot of great people and that are Dutch, incredible people. Incredible people. Thank you for that. Funny thing is that whenever I say I'm from Poland, people say, "Ah, yeah, Holland. I know Amsterdam, of course." Right? So they always twist Poland for Holland, and it's okay. BRC20, okay. So ordinals. Good entry from early 2023, thinking of holding. Cool, good stuff. 7 years. Accepted Bitcoin this autumn as the market leader. No regrets. Smart move. Right on. So let's keep up going. Okay. So the market overall again has been a lot of shift this year. It's not been a continuation. It's been a complete rotation in the opposite directions than the 2022 showed. That the dollar is down overall, breaking below the 200-day moving average easily, and get rejected right around the first attempt. Some breakaway gaps at the same time. Not really a powerful upside signal. UUP, the big dollar fund, is barely making it, holding it at the 200-day moving average, which is still kind of like rising just a little bit, although there is a little bit of discrepancy. So might be that it's the dollar leading the way right now over the UUP. However, let's take a look, because UUP is holding better than the dollar itself, right? The dollar is below 200-day moving average quite deeply. UUP is still above, and it's kind of like giving some slight reaction. So we're gonna see how it goes. What it does, volatility is at the very decent lows. Put and call ratio is 0.89, is below 1. Okay, so that's pretty interesting, right? So there are more calls than the puts. What else? 81% for the top S&P 500. Sorry, for the top 100 S&P stocks. 81% of them are up. That's quite a powerful record. Breadth is strong. The yield curve is still inverted. The 10 years minus 3 years is still inverted, which is quite an interesting thing, because it's the interest rate spread. It's considered a macro indicator that is leading indicator. Okay, so the bonds are breaking out of the bear market trend line, and they're breaking into the new bull market. Okay, that's what it seems. And even though, of course, I don't know, the future might be wrong, there might have been a couple of attempts of a breakout earlier that were just faded away. Still, there is this impulse as that year long end of the maturity curve, of the yield curve, basically, is reflecting investors' expectation much more than it does the Fed's monetary policy, which acts upon the short end of the yield curve. All right, so at the end of the day, this tells us that investors have shifted their expectation, and that comes in the Q4, where the rate hike pauses came in. This is the period where the first voices of cutting the rates came up ahead of the U.S. elections next year, right? So all those things concerned, it's fairly bullish. So another bullish thing is that 2023 was a market rotation away from the defensive stocks and into the offensive stocks, right? So the XLY versus XLP relative strength ratio tells you that for the entirety of the year 2023, the things that we want put the dominance over the things that we need. Okay, so we basically moved away from being defensive about our choices as investors as one, as the market, and moved right to making it aggressive, right? It's we feel the market is supposed to go up because at the end of the day, we only buy things if we expect them to move up, right? So where is Bitcoin in all that? So knowing that it's a very good performer, right? Knowing that it's basically there while everything else in the stocks is there. That's one thing that gives us a little bit of a context. Now, halving wise, we are approaching the halving time. Okay, we're approaching the halving time. And if we go to the Binance halving countdown, Binance, shout out to Binance, they are our partners, by the way, official partners of the Birb Nest. So that might be something to consider. 109 days, a little bit more than 109 days. 109 days from now, 109 days from today, is gonna be 16th of April 2024. So somewhere mid-April, we're gonna basically take the fourth halving, and the halving happens every 210,000 blocks, basically, right? And this is gonna be the fourth halving, and the fourth halving, well, there are many things that we don't know. However, there are many things that we also know, and every single halving in the past brought massive rallies, and it brought powerful price action right after. Okay, so the conditions seem that a pattern is supposed to repeat itself or get close to it, to repeating itself rather than change all of a sudden. The digital scarcity goes up as the mining rewards get halved, basically, right? And that's where it's called the halving. We cut the mining rewards by half, and it incrementally becomes more and more difficult to mine Bitcoin, more and more expensive to mine Bitcoin. Okay, which naturally drives the electricity prices higher and Bitcoin prices higher. That's what it does. So it's typically the things, if there is less of it, we wanted more, if that makes sense. Okay, so technicals. Let's take a look at a long term. Is it going to be a long term one? Well, so this is a weekly one. Long story short, okay, let's take a look at this one. The 200-day dominant trend is rising, and it's been rising since March this year. This is Bitcoin bull market trend. This is not my opinion. Like, I keep repeating that like a broken record since the beginning of the year, since the 20K breakout. That's not my opinion that the bull market is running. This is something that happened. This is chart telling you, hey, I'm the line. I'm moving up. I'm not moving down. And if the line is saying, hey, I'm moving up, the line is a bull market line, not a bear market line. Okay, so first target of the breakout was achieved at around $38,000-$40,000. The second target is pending at $40,000-$50,000, which may or may not be fulfilled this year. Who knows? There we still have 2-3 days to complete the year. Still, 160% return, 150% year-to-date return is quite a strong one. The average went up from 19,000, if I'm not mistaken, from 19,500 all the way to 31. That is going to make it about 70-80% of the incline for the average itself. Okay, so it tells that on average, if you held on to Bitcoin for 2023, on average, you would have made 80%, right, or so. However, most of the time, of course, you have made just 160%. So the trend is up. It's undeniable. The bull market has been undeniable ever since March, or the most sensitive indicators gave you a heads up, just like this one, just like the Bear Beacon Pro one, which is going to be displayed right over here. It should be, at least. Okay. Is it going to show up? Maybe it's just the internet issue. There you go. Right. So this has been the case. Right? The more sensitive indicators like this proprietary custom 200-day BPRO trend line, it actually gave you a breakout signal on 12th of January. On 12th of January at 17,900. The more sensitive indicators that I used gave a triggered a bull signal at $17,000. Okay, and ever since we basically moved up on average to support around 36,000. right? So that's that 200-day BPRO moving average support right now. And here's a little bit of a retrospection, for the expectation for the prediction that I made, and it was made at the beginning of the quarter, at the 1st of October. What happened was we commented that, based on a seasonal record, October averaged 20%. Point number one, 20% up, right? And October was 70% of the time. It was gave you strong performance, 27% over the typical average, 20% outperformed, but almost 50% the typical average October performance behavior. November as the best month. Well, it wasn't the best month. Still, it was positive. Quarter four on average was supposed to be 50%. So instead of 50%, okay, right now we are at 55% since the beginning of the quarter. So the expectations shared at the October 10th and even earlier, that was just a rendition of what I mentioned earlier, this end of the September, with our seasonality article. That talked about the quarter four average performance 50% gain on October 10th and earlier September 26th. And the relative strength of XLY XLP rising, which is something that I confirmed, and into market bull market season for the NASDAQ, which broke the all-time highs in the futures side. Quite a powerful rotation, and we're at 55% quarter up to date. It moves really nicely in line with the expectations. So it got this. What else? So this is my private system. This is the private Verbigator Pro current time frame trader system that I use. This is what I make money on. This is what I lose money on. 70% of the time I lose because I get chopped in sideways. However, when the market finally catches on the trades, on the trends, I rally along with it and I adjust the stop, right? So I get chopped in situations like this, like sideways, because there are a lot of whipsaws, right? Sideways means noise. Noise means randomness. There's a lot of random fluctuations, a lot of false signals when the market just breaks away slightly higher or slightly lower than the threshold, than the support or resistance, and it just rolls back inside the range again, right? So it's very misleading. It's very full of traps. It's very full of whipsaws, false breakouts, specialist breakouts. Doesn't matter how you call that. What matters is that I get chopped, and this is where I lose money. So 70% of the time, 7 trades that I take are lost. However, the losses are kept small, because I use the current time for trader strategy that tells me exactly where to put the stop loss based on the volatility. Okay, so even though I get chopped in the sideways like I did, I got stopped up here for a 10K loss, I got up here for a 10K loss again, and it's still 170,000 profit that I made over just one trade, basically, over the last 45 days or so. So I take a lot of small losses. However, I compensate all the small losses with those uncommon, infrequent, big rallies, just like this one that made me open the position at 28,500s. Sorry, it was right here, 28,500s, and made me rally along to 42,500s or so. Okay, so this is what I hunt. I hunt for those big trades, and 70% of the time I'm wrong. However, my trading system, how I make money, is different than the way that I can make any predictions. Those are two different things. I don't trade based on predictions. I don't make money based on predictions. Okay, so making predictions is a different thing than trading. It's completely different. Okay, so I'd love you to take away, guys, that it's impossible. It's statistically impossible to keep winning and being right and making money over the long term on predictions, because you cannot predict the COVID. You cannot predict when the Martians attacked on the planet. You cannot predict when there's a presidential assassination. You cannot predict, stuff like I said, new virus strain or whatever. Those are beyond your control. So we cannot predict that. Okay. If someone tells you that they guessed a Bitcoin, they took a look at a Bitcoin chart and they guessed when the COVID would come, they're liars straight up front, basically outright. Okay, it's impossible to predict because the nature is complex. The reality is very complex. And the butterfly effect makes the tiny little change on the other side of the planet can make the whole world just shake, right? So all the predictions, take it with a grain of salt. It's impossible to be constantly right. If I guess my prediction right, cool, fair enough. However, most of the time I'm going to be wrong about the predictions because guess what? I cannot predict if I wake up tomorrow, not to mention if I wake up in 5 years from now or 25 years from now at the same time. Needless to say, I don't know what Bitcoin is going to be doing at that time, right? So like I said, making predictions is for fun, right? It's good to have some baseline, especially if the predictions are made based on data and facts and numbers rather than just pure luck and guess and blindly throwing the dart into the bullseye and praying that you're going to hit right in the very center. So long story short, we're going to know that we want to rely on the data. We want to rely on the facts, okay? And the facts are that Bitcoin is in the bull market. So the bull market tends to extend and tends to rally, okay? So we can naturally expect that in 2024, we're going to extend the 2024, we're going to extend the 2023 rally. Now, I don't know where that's going to be. I don't know where we're going. However, all I know is that in the past, every single time that a halving came up, we rallied strong into the new all-time highs, okay? We gave a 90x rally to the new all-time highs. Then we get the next halving, 30x rally to the new all-time highs at $20,000, okay? First 1250, $20,000, $60,000, $70,000 at a 700% return, peak halving to the peak. Okay, now I don't know where we're going to be. Maybe there is this local weakness that we're going to have and correct after this 160% move. Maybe we're going to retrace to 30,000. Maybe we're going to retrace to 40. Maybe we're going to push past 70 already. I don't know. I have no idea. Still, what I know is that every single time that whatever the price was at the halving time, if you bought at the halving time, you set yourself up for massive rallies. And guess what? I'm not denying the facts. I roll along with the facts. Okay, so I take along with the facts and I play with it. So the facts are, the evidence is, the proof is that Bitcoin always rallied hard after the halving. So there is no reason to expect something else this time, right? And there are many reasons to expect that. So again, knowing that we don't know the future, still the baseline expectation is that we always rallied hard after the halving. So that becomes your anchor, that becomes your natural expectation or go-to place in the thought, okay? Especially that the sentiment has improved a lot and sharply, right? We took a year to rotate from complete fear and extreme fear into quite an aggressive enthusiasm, right? And greed, if you will. So all things concerned, we're looking at an overall strong, powerful movement, okay, for all the cryptos. So it's not just Bitcoin that rallies, it's all the cryptos that rally, right? The last time I checked, there was about 70% of the coins that were above the 200-day moving average that were moving in their own bull markets, okay? If 7 out of 10 coins move in the same direction, maybe that's not an accident or coincidence situation. So speaking of the facts, let me show you real quick the presentation that I did. Okay, it was, I'm not gonna give you the full presentation. Still, it's just a chapter of what I did for the banking sector the other day, like at the end of November, for 2024 outlook for CBDC smart contracts in Bitcoin. Knowing that there is an overall lag, 6 or 9 months lag between the market cycle and the economy. When people make money on the market, they reinvest in the goods and services. Basically, everybody gets happier because they can spend money on the new car, they can buy a new car, they can buy more stuff. And then eventually that empowers the economy, right? And that takes the economy out of the contraction, for instance. So funny thing, speaking of the CBDCs, which are, of course, the secure digital money issued by central banks next to the traditional currencies, Nigeria is the only country with the approved CBDC working, right? Nigeria, if I'm not mistaken, that's what it's called. There are a lot of countries. Speaking of facts, 100 plus countries are basically the correspondent with 95% of global GDP are studying the CBDCs, right? So it's happening. The exponential growth, better payments, whatever. So it's not that CBDCs are terribly wrong for what is what. Just like any other tool, just like money, just like cash, just like guns, it can be good or bad in the hands of people. It's us making it good or bad. Otherwise, itself, it's just a tool, and it can make the world better. Still, for the smart contracts, for those self-executing digital agreements, based on, for instance, a blockchain like Ethereum, there's this magnificent growth of 800% in the last, almost 900% in the last just 3 years, right? So there's this very strong growth in the daily contract verified contracts. That this is the adoption curve. The adoption curve basically moves up, right? This is the adoption curve for the Ethereum related smart contracts, for instance. So the market growth is a lot right there. There's a lot of regulatory compliance that has just been introduced: GDPR, General Data Privacy regulations, the CCPA, MiCA, Market in Crypto Assets, EU European Data Act. All that refers and somehow encapsulates the smart contracts in crypto. So there is regulations for crypto, and just Bitcoin itself, knowing that it's a peer-to-peer electronic cash system. By the way, when I was explaining that to the banking sector, to all those bankers, many of those are very biased. Many of those are very prejudiced. And even before I say anything about Bitcoin, they had already got their opinion. So is this logical to have an opinion before you even hear what that is? Of course not, right? It's irrational. So long story short, just making sure that you guys can see it. Hold on one second. So that's gonna be interesting. Why wouldn't it show up the whole thing, the whole presentation? Give me a second. I'll try to upload it this way. Upload it differently. I think I was just showing you some stuff. Hey, Karan, my friend. Good to see you, bro. Good to see you, my legend. Great guy, everybody. So let me just show off real quick this presentation. Why would it not just show up? Right, so that was the first slide. I jumped through a couple of slides. And that was the Nigerian, that was the 100+ countries, not corresponding with 95% of the global GDP, basically processing the CBDCs. The smart contracts, that was the chart that I was showing for the 900% growth, basically towards the right hand side of the chart. In 3 days, 3 years brought almost 900% growth on the smart contract side. So this is the adoption curve I was referring to. And for Bitcoin, like I said, those are the facts. We cannot deny the facts. And the facts are that the adoption prospers, the adoption goes on. The volatility goes on as well to improves significantly with Bitcoin when compared with the NASDAQ. Okay, so there's a 400% growth on the long-term correlation. It's directional, it's moving up between Bitcoin and NASDAQ. So Bitcoin is becoming slowly the tech stock. Bitcoin is becoming like NASDAQ as it grows. Okay, those are the facts. At that time of presenting, that was before the massive pump, and Bitcoin was only, quote unquote, 122% year to date. And now it's 150, 130%, 160%. So it's 30, 40% up ever since that presentation was shared. Still, it is the fifth bull market, and that's how I know. How I know about it is because I tracked the 200-day moving average, right? So if I watch the macro charts and saw the inverted yield curve for the high interest rates, I would say that this cannot be a bear market. This cannot be a bull market. However, because I'm a chart and market technician, I observe the charts, and my job is to know the charts well. And if I know the charts well, you are 6 to 9 months at least ahead of the macro guys. So using technical analysis gives you 6 to 9 months of advantage ahead of the world. You know when the bull market is up 6 to 9 months ahead of everybody else in the world. Technical analysis as the toolkit to manage the risk is a blessing. It signals you early when the bull market is on. It signals you early when the bear market is on. And you do not deny the facts. You cannot argue the reality. It's not that it makes us look stupid. It just loses us money if we deny the reality. So the correlation has been up. The institutional bias they refer to is full of denial. It's full of denying the facts. They're not going to accept the facts just because they don't like Bitcoin, right? So it's like you're showing them a list of facts. I literally showed them this presentation. I literally show them this. And that's the first time I'm sharing this, by the way, with you. So enjoy. This is a fact sheet. Those are all numbers. I don't make them up. I take them from the charts, okay? And if I show them the numbers and they say, hey, listen, those numbers are whatever, I have my different opinion, there's prejudice, there's bias. Bias doesn't make money, bias loses money. And someone, just because they don't like Bitcoin, because it doesn't fit in something that they already know, because they're full of denial, conservatism, and the overall behavioral biases, they ignore the 160% rally. Imagine the pain of missing 160% rally just because you don't like something. That's crazy. That there has nothing rational to it. It's nothing close to rational. And those are the people who manage your money in the banks. Those are the people who are responsible for storing safely your money. That's crazy, isn't it? Right? So for 2024 recommendations, in terms of for 2024 recommendations for the CBDCs, I basically encourage collaboration between the public and private firms for managing the risk, sustaining CBDC adoption versus traditional banking operations, boosting inclusion and efficiency, especially if some countries' currencies are ruined, just like Brazilian real or the Argentinian peso, sorry if I'm not mistaken, right? So the peso or whatever the currency is broken. At times there is no other way to resuscitate it, just to create a CBDC that would exist parallelly, and those it can have positive effects, right? For the smart contracts, there's one thing that I wanted you to take away. By the way, let me know if you guys appreciate what I'm sharing with you. Perhaps it's super boring, and perhaps I should close this off ASAP. Let me know. Let me know in the chat, please, in the comments. So the Basel Committee, the supervising body recommending the solutions, or recommending the risk structures for 2024 and 2025 for the global central banks union, if you will, encourages investing 2.5% or more into tokenized RWAs and stablecoins. So it means that the supervising body of the central banks encourages the global central banks to own at least 2.5% or more of their reserves in cryptos. Let me reinstate, the global central banks are officially recommended to own at least 2% of their reserves in cryptos. The central banks are investing in cryptos, everybody. All right. So imagine betting against that. Speaking of Bitcoin, again, for the recommendations that I made, is that a fourth halving for April 2024, right now it's 1518. If it changes, it boosts the mining difficulty and mining digital scarcity overall, right? So if there is less of it, we wanted more. That's a rule of the thumb. That's the baseline. That's how it works. For employing the best 8-month seasonal strategy, knowing that Bitcoin is getting more and more similar, like NASDAQ, we may consider basically buying in September and selling in May go away, basically, right? So it may go away if you hear about this, you know what I mean. And main recommendation that I made for the banking sector up there was that they are supposed to overcome the institutional bias, this overall prejudice against Bitcoin, because it's something else because it doesn't generate cash flow. They say it's worthless because it doesn't generate cash flow, because it doesn't give them financial statements every quarter. How silly is that? Right? This is crazy. And the regulatory framework is there. So we just need to accept it, right? And this is the 4-year presidential cycle. This is those are the recommendations that okay, let's roll with it. This chart actually should be a little bit improved. I have it all lined up for you to show in the next 5 minutes. Still, like I said, for the 2024 outlooks, for the best strategies, you need to follow the trends. And the trend is that the election year is particularly strong. It's particularly strong when hold on. So if I'm gonna turn this one off, let me show. If I'm gonna turn this one off, what's it gonna show up? It should. It's particularly strong since 1949. Okay, when taken into consideration the sitting president re-election, running for re-election, which is basically the case right now. Okay, Joe Biden is running for re-election, and November, the 5th of November, if I'm not mistaken, the November elections that are going to be, well, if the current president is running, this gives more certainty, or should I say less uncertainty. Less uncertainty is nicely welcome in the financial markets because traders feel less uncertain. If they feel less uncertain, they're going to be more eager to take up the risk and hence speculate and hence buy and hence price go up. Right? So while the typical average seasonal pattern just comes up at around 7-8% for the typical overall ever averaged cycle performance for a year, right? The typical sitting president runnings, the green variant, the green case, averages 12.8%. So it gives you a gap of about 4-5 percentage points, right? In the percent terms, it's outperforming by 60-70% typical behavior because of the less uncertainty. So less uncertainty is when the welcome by the traders, and when they feel there's less uncertainty, they're going to bet more. So the 2024 is a very good seasonal context for a very abnormal, nice upward expectation, yes, and abnormally strong extension of this year's rallies. Maybe it's not going to be as strong as 2023 because 2023 is exceptionally strong. It's the strongest out of 4. Still, it's telling you that just maybe you're going to experience some good push for 2024. Right, and that's the latest chart. Those charts are by Almanac Traders, by Almanac Trader, my good friend Jeff Hirsch. And Jeff and I put together this Bitcoin seasonality article, by the way, the other day. And this seasonal article basically we communicated that openly and actively. You can search around, scroll on Twitter and so on. We released this article on the worst day of the worst month, September, the worst month. And the worst day of the worst month was on September 26th, which is where we released this Bitcoin seasonality article, just like the orange arrow suggests. And ever since, Bitcoin has grown by basically 100%, right? By 100 percentage points. So it's 60% year-to-date return at that time. Now we're close to 160%, 100 percentage points return up there, 100% basically return, strong push ever since. So this article, by the way, is free. You can, if you want, you can download it. I think it should still work. Let me double check with my phone. I think it should still work, the QR code. Yeah, it works. So if you want, you can download this article. Still, it's free. You can take your phone out and scan this QR code right ahead and just copy paste it. And just scan it with your camera, scan it with whatever application you have got, and it's gonna give you the free PDF article about the Bitcoin seasonality. And that was it, right? So that was it. So let's do incorporate this this analysis as we go, right? Because at the end of the day, we want to follow the facts, and if we want to follow the facts, we want to rely on something that is full of numbers, not just opinions and crazy predictions, right? So the next year is supposed to give us a nice extension, give a nice extension of the next of what's happened this time, right? Give a nice extension of 2023, rallies abnormally strong for this particular case. So all that leads to the main conclusion that we want to stay motivated by the seasonal patterns. We want to continue to trust the numbers, not our own thoughts, not our own opinions. I don't care about my opinions. No one, not a single one of you should care about my opinion. That's true. No one should care about my opinion. No one should care about anyone's opinions, even their own. We are victims of our own opinions. You don't want to hold opinion in the market because most of the time we are wrong. The market is deciding what's fair, not us. If we continue to have different opinion than the market, then it's just, like I said, not only makes us look stupid, it actually loses us money. There are people who are shorting 2023 all the way up. There are people who blew up accounts trying to hold on and defend their bear market thesis, while Bitcoin just earned 160% up for 11, 12 months straight. So it's just a bad deal to ignore the numbers and facts. So let's keep in mind the facts, and you're gonna beat the market by using technical analysis. Right? You're going to beat the market by using the momentum principles. The momentum principles for portfolio management as well for 2024 is long strength and short weakness. You want to be holding on to the winners and cutting out losers. You don't want to do the opposite. Most of the people do hold on to losses and cut out winners early. You want to do the complete opposite. Long strength, short weakness. Okay? Let the winners run, cut the losses short. That's the thing that we should do. So as long as you do this in the next year, next 2024 period, you're gonna find that it's actually a profitable strategy itself, right? And other than this, you might want to consider getting this Beginner Pro, the private strategy that I have, like I said. And I'm mentioning that in particular reason because the Burbness is right now, this is the self-promotion part, if you will. However, you might find it valuable. This is the strategy that I use, like I said, and I post all my trades inside of the Discord, inside of my own channels, right? So I haven't updated this one yet because it just stopped me out right before the stream. However, I mentioned, I keep all my trading journal right there on the position size, on the screenshots, on the entries, on the exits, on the stops, on the losses, on the wins, and so on and so forth. So stop loss adjustments, I communicate with our beautiful community every single day. Along with my great team, beautiful people in the team. I'm just probably the numbers of those beautiful, smart people that I have on the team. It's incredible. So everything is proved. Everything is proven. That the signals that we have are proven. You can get the signals free if you want. You can get the signals paid. However, if you want, you can get them for free forever. Right? There are ways to do it for free. Most importantly, like I said, if you want to follow those trades, if you want to stay notified with the market, you have a chance to do it. And right now, for a limited time, I'm giving this away as a free bonus because the Burbness is celebrating the 6th anniversary. The Burbness has started the 7th year of existence, right? And well, that's enough of a reason to celebrate. And this particular strategy of mine, well, the Beginner Pro is a toolkit of strategies you can adjust and have plenty of those strategies. The one that I use is particularly available along the other strategies to be got. You can receive it and claim it for free as a free bonus, literally with the link. And the link is pinned under my tweet, under my pinned tweet, if you will, right? So if you go to my profile at or theburbness.com, or if you go at CryptoBirb, now with the tags with the CMT, just check out not to speak with the impersonators. My pinned tweet includes the link, and this link is basically taking you into the discounted VIP access that comes along with the massive celebration that we have. The Bourbonness is 6 years old when we are turning the 7th year of existence. And for that big anniversary, we released a special limited trading bundle that is going to be valid only for 2 days more. And once 2 days pass, it expires, it just goes off. It's going to disappear. And since we cannot wait for the latecomers this time, this one comes with a 50% discount, even if you take it for a year. How it works, you take it for a month. The trading bundle gives you exclusive Nest Club, the typical exclusive Nest Club VIP subscription that we have. That is the most beloved ones. That is the newsletter, bestseller in the Bourbonness since 2017. And you get the private strategies. Those are the ones that made me 670K profit in 3 trades. Those are the ones that made me 500,000 profit in 2 months. Those are all true and those are all proven. I attached screenshots. You've seen it, everything. It's real, it's happening, it's profitable. And if you want to get it, you can get it for free this time. Like I said, the VIP access is 50% off, 30% off for a month, and so on. You can get additional 10% off if you get with crypto, because we love crypto people. We are crypto folks. So if you want to pay with crypto, we're going to drop your prices by 10%, whatever your order is. At the end of the day, like I said, if you pick the trading bundle at this VIP group access, discounted at this limited discount that is expiring in 2 days, you're going to have that Barbicator Pro, this strategy, this very particular strategy that I use among many others, right? It may look like this, it may look like 5,000 different options. It's just for you to find your most beloved ones, and the one that is going to work for you, with all the instructions, with all the workshops, special PDFs, documents, bonuses, extras that you get. All that comes for free as a free bonus. So every exclusive Nest Club order gets Barbicator Pro as a bonus. And guess what? If you get it for a month, you're getting Barbicator Pro for free for a month. If you're getting that for the 3 months, right, on a discount with 10% off crypto additionally, you're going to get Barbicator Pro, my private strategy, for 3 months for free. If you take it for a year, because you want to save 50% and get additional 10% off on the discount, at the order, at the checkout, with crypto, with crypto, with credit card, whatever you want, and claim all the bonuses, you're gonna get BPro for a year for free. And that offer expires in 2 days from now. And that's just about it, right? So if you want to use this, feel free to go ahead to my Twitter profile, right? If you go to my Twitter profile, you're gonna take up the pinned tweet and it has the link. If you click on this link, it's gonna get you the deal. And the deal expires in 2 days. And it expires at the end of the year, basically. And when it does expire, it does expire. And everybody who holds and who gets to purchase, renew, whatever that is, if you're a current subscriber, that's even better. It's gonna give you additional drop-off price. If you're a new subscriber, if you get the VIP discounts and check out with Apple Pay, with Google Pay, with crypto, whatever you want, anywhere you are, you're gonna get the B Pro in the same length equivalent duration for free. And what can I say? I'm wrong about a lot of things. I've been wrong about a lot of things. I've made a lot of mistakes. One of the biggest mistakes was not investing in my own education when I actually needed. And Warren Buffett says, that's the quote that I'm going to leave you with for 2023 as the last stream. Warren Buffett says that the best investment you can make is investment in yourself, because the more you learn, the more you will learn. And that actually is how it works. At times, a $50 page, a $50 package, a $50 guidance, a $50 course, $50 book includes the knowledge that is going to make you hundreds of thousands of dollars. And imagine not really wanting to pay $50 and reach out for millions because you want to keep and hold the $50. So every single decision that we make and we purchase is an own decision and should be our own decision. However, it's always a risk versus reward. And perhaps at times, by trying to save $1, we're going to miss out $5 million rally, right? We don't know the future. Still, like I said, free bonus is waiting for you. If you go to thebourbonness.com, you're going to find it. If you go to my pinned tweet, I'm going to hold it there. And with the link, you're going to find it as well. And that's big congratulations to you and shout out for participating in all the webinars. Happy New Year's to you guys. You guys are awesome. God bless you for 2024. Happy New Year celebration. Stay safe, and I see you next year. I've been your host at the CMT. Bye-bye.